Home buyers are back in the market. Inventory is actually still rising, but slightly. Home sellers are actually pulling back from the market, and there's price cuts everywhere. And investors, well, they've been gone for a while. The housing market is shifting fast, but not in a way that you might think. So the big question is, are we finally seeing a more balanced market, or is just this to become before another storm? Let's dive into the data, look at what's happening here in Austin and across the US, and figure out what this all really means if you're buying or selling in 2025, what you could expect the last half of the year. I'm Jeremy Knight, your favorite Austin realtor. Look, I like to make content for you, not to help you buy or sell, but to help you buy or sell, if that makes sense. And so I want to give you the best information if you are in the process of buying or selling here in the Austin area or around the country. So for a while, it felt like home buyers disappeared. Sky high prices and 7% mortgage rates had everyone frozen. But now the tide is actually starting to turn a little bit. According to Logan Mohtashami from Housing Wire, Housing Market Tracker, now the mortgage purchase applications rose 20% year over year and 10% week over week. That is actually huge. That means a lot of buyers are coming back into the market or getting ready to come back into the market. What's the strongest performance we've seen in a long time? Well, it's 19 weeks of year over year growth. So this is not a fluke. It's starting to be a trend where we're seeing multiple weeks of just year over year growth in buyers coming back in the market. Now, pending data just came out as well, and pendings are showing that more pendings are up. In fact, more pendings than last year. So does that mean that more buyers are coming back in the market? You tell me in the comments section. Even more surprising, buyers are stepping up without waiting for a massive rate drop. In fact, in 2025 so far, we've seen 11 weeks of positive growth, 8 weeks of negative growth, and 3 flat weeks. This tells us that buyers are adjusting to the new market reality. They're not expecting 3% mortgage rates anymore. They're doing the math, locking in where they can, and focusing on finding value, not just timing the bottom. And that's especially true here in the Austin area, where many buyers sat on the sidelines in 23 and 24. Now, with more homes to choose from and fewer bidding wars, they're starting to make the move. So if you are waiting on the sidelines last year, I'd love to hear from you also in the comment section. Are you more inclined to buy this year than last year? What's changed? We make this content for you, so we'd love to hear what you think. So now let's talk about the inventory, because this is the biggest shift we've seen in years. Nationally active inventory rose from 808,000 to 825,000 homes in just 1 week. For comparison, the same week in 2024, we only grew from 611,000 to 620,000. That's a huge increase and the strongest growth since 2019. Here in Austin, the impact is real. We're seeing more resale homes hit the market, more builders offering quick move-in incentives, and more properties sitting longer. The days of listed on Thursday, under contract by Friday have been gone for a very long time now, although we are still seeing some multiple offer situations here in the Austin market. So why are sellers listing now? They've waited long enough. Many held off for years, hoping rates would drop. Now they realize they might not even happen soon. They have equity. Most sellers have built enough equity to absorb the higher rate on their next home. And a lot of times it's a wash. If you're in a market where you're selling your home for a lot over list price, you're buying the next home for a lot over list price. Same thing here. You're selling your home and hopefully getting a good deal, and then getting a really good deal on the buy side. So most homeowners, they are not distressed. This isn't 2008, even though a lot of people would love to use that term and tell you it's 2008. It is nothing like 2008. Homeowners mostly aren't underwater, and foreclosure rates still remain relatively low. They've increased quite a bit, but that's because for 2 years you couldn't even do a foreclosure. So now we're seeing some more of these foreclosures. Still, we may be hitting the peak. Housing Wire reports that new listings are slowing slightly and some sellers are starting to pull back again. So this whole surge in supply may start dropping according to Logan Motoshami. It might not last deep into the year and more homes might start to pull off the market. Traditionally, what we see is around November, a lot of home sellers have had their homes in the market start pulling them off the market. So we may start seeing that. And then a lot of these sellers that are, a lot of what we're seeing that are actually selling are people that are, really either desperate or they have to sell. They really need to get this price. So they're reducing their prices to get that home sold quickly. Tell me what situation you've been. I'd love to hear what your thoughts are. But Logan Motoshami is saying that we might actually see more sellers start to pull back and pull their homes off the market is what they're indicating, because they're realizing as a seller, I may not get that high price. In fact, we even had this year where we had clients that were ready to sell, but they said, you know what, we're just going to wait another year or two to sell because we really, really care about the price we get. We're not desperate. And what are you seeing? When inventory rises and buyer activity is still cautious, there's only one place for prices to go: down or at least adjust. Last week, 39.5% of all active listings had a price reduction. That's up from 36% during the same period last week. And here in Austin, I bet the numbers are even higher in some areas like Leander, Manor, and parts of South Austin, where there's more new construction and investor-owned property, especially when you're looking out towards Liberty Hill and down in Kyle. Redfin is forecasting a 1% national price decline by the end of 2025. Housing Wire projects a 1.77% normal-ish gain, which after inflation actually means a slight real decline in value. This is the market correction, not a collapse. I know a lot of people are saying that there's crash, 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 and there's lots of people that like to use that word to get clicks and then sell you subscriptions to their subscription model. But then, realtors are really the worst people in the world, right? All right, sellers are adjusting their expectation. Homes are sitting longer. Buyers are negotiating again. And in many ways, that's what a healthy market should look like. But let's be clear, the opportunity for buyers is here. If you know how to spot value and negotiate, which we've gotten several deals, then it's a great time. Are you seeing price reductions where you're searching? That is the big question. Where are you searching and are you seeing price reductions? Now, this part is huge and it doesn't get talked about enough. Investors, well, they've been retreating. New news out shows that during the pandemic, institutional investors and mom and pop flippers were driving up competition. How many of you were writing offers and getting outbid? In some Austin zip codes, investors made up more than 25% of all purchases. That meant more bidding wars, fewer homes for families, and rising prices that outpaced home growth. Now, a lot of those investors are the investors that we're seeing selling right now. There's a lot of people that bought second, third homes, people that bought homes thinking they were moving to Austin and it never did, and then their homes had to go on the market the year after. Or what we've seen is that with rentals prices dropping, you're seeing a lot of these unintentional investors, people that bought a home that just never moved in, finally selling. But more information shows that investor purchases are down nearly 30% year over year nationwide. In the Sunbelt states, including Austin, some markets are seeing drops of 40% or more. Why? Because rising rates, slowing rent growth, and tighter margins have made the math just not work, especially here in Austin. Flips aren't penciling out. Cash flow properties don't flow the cash they wanted, and especially at a 7% mortgage rate. And with price cuts growing, many investors are choosing to sit on the sidelines or offload inventory altogether. That's opening the door for primary home buyers who have been shut out the last few years. Do you think fewer investors in the market is a good thing, or do you think that they're going to start rushing back as soon as rates drop? Now, here's what's interesting about rates. Let's not forget that mortgage rates, they're still the elephant in the room. Right now, rates are bouncing between 6.85 and 6.95, closing last week at 6.89. Logan Motoshami's 2025 forecast puts mortgage rates in the range between 5.75 and 7.25, and the 10-year treasury between 3.8 and 4.7. Now, there is information that we may see interest rates drop or just the Fed funds rate drop, which may drop rates into the under 6.5% range. I think once we do see rates under 6.5%, I think I've said this several times, it's where you're going to see more buyers back in the market. Maybe not as many investors. You tell me what you think. Here's something that you might not know though. If mortgage rates spread, the gap between the 10-year yield and the mortgage rate were back to normal levels, rates today would be 0.6 or 0.8% lower. In other words, it's not just the Fed making rates high, it's also how mortgage risk is being priced into the market. And if those spreads improve, we could see a dip in rates even without a major policy shift. But for now, buyers and sellers should prepare for this to be the baseline. And hopefully, like I said, if they get down to 6.5%, that you'll see more buyers back in the market. And if you see rates back at 6.5%, are you going to be back in the market? You tell me. So where does this leave us? We're not in a crash. We're not in a bubble. We're in really a reset. Do you agree with that assessment or not? Or do you really want prices to drop even more? And the reality is this was just long overdue. For buyers, there's more inventory, less competition from investors, and growth negotiation power. And growing negotiation power. But affordability is high though, so working with the right agent and the lender is definitely going to be key. For sellers, pricing matters more than ever. Gone are the days where you could just pick a number out of a hat and that's what it would sell for, or potentially even more. And for Austin especially, we're seeing all this play out in real time. More listings sitting, slower sales, bigger incentives, smarter buyers and sellers who are just beginning to adjust. In fact, that's probably the hardest part for me as an agent right now, is getting my clients to drop at a quicker rate based on pricing. Now, we're also trying to price really smart and offer buyer incentives. So I'm curious if this helps you with your buying or selling in the future. I really do think that we're going to see a kind of rebound in the last half of this year, especially if rates drop. And we're probably going to see a lot of sellers pull their homes off the market here relatively soon. I'm Jeremy Knight, your favorite Austin Realtor. I'd love to hear from you in the comment section. What do you think?